Hi everyone, this is Steven. Before we get into the course, I'd like to go through the disclaimer. The information presented in this video and all the videos in this course are through Wealthy Education and are for educational purposes only. Nothing in any of the videos is intended as a recommendation to buy or sell any specific security, equity, or option. Now let's get into advanced technical analysis. In Module 1, we'll be talking about support and resistance indicators. In our first video, we're going to be talking about multiple time frame analysis. It's not a complicated concept, but it's important that you understand it as we'll be using it throughout the course. So in multiple time frame analysis, we review 2 to 3 different time frames on our chart. As you can see on our graph on the left, we may want to look at the daily, weekly, and monthly chart of a stock before we make a trading decision. And the reason we do this is because different time frames can tell us different stories about where our stock is headed, whether or not it's in a trend or it's not trending. The time frames should be 4 to 5x minimum apart. What that means is you don't want to look at 3 different time frames that are close together, or else you'll basically get the same picture. If you're looking at a 1 minute, a 2 minute, and a 3 minute chart, it's really not going to help you out to get a bigger picture. You want to be able to zoom out from your trading time frame and then to zoom in from your trading time frame as well. For example, if you're trading on an hourly basis, then you may want to look at a daily chart to get a larger picture of what type of trend the stock is in. And then as you get ready to execute a trade, you may want to look at a 15-minute chart to see how the stock is performing in a shorter time frame, and then use that 15-minute chart to confirm either your buy or sell signal in your hourly chart, which you're using as your main trading time frame. By looking at multiple time frames, you can more precisely time your entry and exit points. Throughout the videos, we'll be combining multiple time frames with technical analysis tools, and we'll use those tools in multiple time frames. We may find that different time frames give us conflicting signals as to whether to go long or short a stock or to not take a position. Again, this can be helpful in helping us pinpoint our entry and exit points. So let's look at multiple time frame analysis on a chart and see what that looks like. Let's look at multiple time frame analysis on a chart of Bank of America. If we look at the chart, we see that the stock has been trading in a range for several months now. It trades up to a high of 33, and then later reaches a high of just over 31 in May, goes up to 32 in August. So it's trading in the low 30s at the high end of the range. And at the low end of the range, I've drawn a support line at the 28 level. 28 was resistance back in October of 2017, and it then became support. And you can see the stock bounced off of the 28 level in July of 18. And here in October of 18, it's trading right at the 28 level. So let's say that we want to get long the stock and we're trading it on an hourly basis. So we've identified the range that it's in, and we believe it's right around a support level on the daily chart. So what we want to do now is look at the hourly chart, which is the time frame we'll be using to trade Bank of America. So we see, again, it's right around the support level. We can see the stock has trended down to the support level, which we knew from the daily chart. And it's bouncing, and we're seeing some doji and small-bodied candlesticks here. So this is a positive sign on the hourly chart that we're getting some bouncing in the stock. But we also have these negative candlesticks. So right now, if we want to trade on an hourly basis and use our 28 level as support, then we may want to use this candlestick, which has a low, of 2764, combined with this candlestick, which also has a low of 2764. So we have a tweezer bottom here as our stop. So if we purchase the stock here at 28, we may want to use that as our stop, because if it breaks through that level, then it's gone through support and it's gone through the hourly low in the past couple of hours. Now what we want to do is go up here and look at the 15-minute chart and get a little bit closer in to where the stock is. We can see our support level at 28. The stock is trading just below it, but on the 15-minute chart, we have some positive price action. Here we have a bullish engulfing pattern with a large green candlestick engulfing the red candlestick, and the stock has broken above the high of this candlestick, which was 27.95 up to 28.01. So on a 15-minute chart, we see the stock starting to move up, and we may want to actually buy as it breaks back above the support level. Now we can add indicators. So let's look at adding the MACD and see what that tells us at this level. So if we add the MACD, we can see we've got a positive divergence. The stock has continued to move down while the MACD is moving up. And now we've crossed to a buy signal in the MACD as well. But let's back out to our hourly chart again. And we see it's just about to move to a buy signal in the MACD here. And then let's look again at our daily chart and see what the MACD is telling us. And see here we have the MACD still trending down. It's in very negative territory. So the MACD is telling us on a daily chart that it may not be a buy just yet. So we can put all of that together and make our decision. And it depends on on your time frame and what your risk tolerance is. But if we want to go to that hourly chart, and if that's what we're trading, then we're coming right up to a buy signal here. So if I were trading this on an hourly basis, I would wait for it to cross above that 28 level before making a purchase. So that's how we use multiple time frame analysis in deciding whether or not to take a position in a stock that we're looking to trade. I'd like to thank you for watching this video on multiple time frame analysis. As I said earlier in the video, we'll be using multiple time frame analysis in each one of the technical indicators that we're looking at. So you'll get a chance to see multiple time frame analysis in a variety of situations as we go through this course. In the next video, we'll be looking at horizontal support and resistance. I look forward to seeing you in the next video.